Righto, g'day Money Morners, punchy week. We're going to chuck another couple of punches out today. So speaking of something that's been punched right in the bloody face, lithium. Jesus Christ. We're going to reflect on where that was and where it is today.
Oh, it's a nasty day.
And Albemarle Liontown is now just Liontown. We'll get into why that is, if you haven't heard. MetalsTech, bit funky. Bit of a funky thing going on there,
Quirky
JD.
transaction in Slovakia.
The news flow keeps coming out of Calidus. Bit of news flow.
Yeah, I'm going to go into the hedge book there.
Think why?
Let's read between the lines. Eh?
We'll get to that. A few quarterlies out. Mount Gibson. We're going to go into Ora Banda. Bit of get me underground fix for the day. Quarterly, half yearly. What do you call it? Out of BHP and some bit of nickel woes as
Ionic Rare Earths in there too, but yeah.
Ionic Rare Earths, mate. Anything. We've got everything, and you know who else has got bloody everything for the in the early phase of exploration? It's bloody Seamus Murphy from Anytime Exploration. Tell you what, mate. People, soil sampling, equipment, core cutting, and bloody Polaris all-terrain vehicles, even administration. Mate, sort out your exploration incentive scheme applications. Is there anything he can't do? Though I would say they're actually they're like the KCA of exploration, or KCA is the Anytime of underground. It can go either way.
It can go either way.
And if that isn't enough, bloody, he's Seamus Murphy. We love it, and entrepreneurs. Seamus Murphy.
Here.
Because he has expanded, as we said last year, into the geological consulting services side of things. Mate, Sarah Dyer, who's now the Anytime Geo,
I didn't think
the
there was
Anywhere
anything
Anything geologist, is, as we speak, smashing out a mineral resource estimate for a client.
Hey, nice.
Good work,
Proof
mate.
that they do
And
everything.
you may as well get her while she's on a roll. I reckon it's like being at the Cass boys. Once you're on the, once you're winning, once you're on the heater, as they say, you just stay on it. You just keep going. That's what Sarah wants to do with these bloody JORC resources. Just keep it going. Get in touch soon, because everyone's going to be getting in touch and she won't be available. So you want a JORC done?
I had a question for you, mate.
Oh.
They do everything, but can they also just wipe the tears off lithium bag holders today?
Don't know, but lithium's down. Uranium will come in. All good for exploration. All good for Seamus.
Happy days.
He's just going to keep flying. Love the work. Oh, now we were worried last year about the Christmas break, boys. We didn't want underground mining to sort of shut down, but from reading the announcements in bed each morning, things were still flowing. We look at the quarterlies today. No mention of bloody development meters down due to a lack of ground support, and you know why that is?
Tell me.
Derek Hurd and the team did not even have Christmas Day off, because how serious they take making sure there's mesh bolts, splitties, MDX bolts, GUIs bolts, cable bolts, bloody every type of ground support on site during that Christmas period. That is the dedication, because everyone obviously took action and chucked in a DSI order, rightfully so. And the mining industry is still alive pretty much because of DSI.
Thanks, DSI.
That's an interesting insight, right? Because when you read these quarterlies come out and they say, revised guidance down because December we had low availability. You know it's not low stock thanks to lack of bloody...
It's nothing to do with ground support, because they had... Well, I think they had a honey glazed ham and stuff on the go while they were shipping out all the ground support. But, mate, that is what they do. Do yourself a favour. Just don't remember. You only need to remember one name in ground support. It's DSI. And what better way to start a year? Go become a client and chuck in a DSI order.
Chuck in.
Good things will happen to you.
Like it.
Love your work. Right. Have a look at lithium today, boys. On the back of lithium obviously got hammered on in America last night, and it obviously, flow of money. It's the flow of funds, boys. The money's just flowing it. Isn't it, Ali GC?
You're hurting me.
Have a look at Liontown. Liontown actually got hammered after the Albemarle exit, and we'll expand on that in a bit.
Yep.
Down 11%.
Yep.
Mate, core 19.5. They were over $1 6 months ago. PMET 78 cents, $2 before their mineral resource. Delta 27 cents. These prices were this morning. I think a couple have recovered a tiny bit since. 27 cents. MinRes buying. They were buying them at 90 cents. They developed $2.06 there because they got the lithium exposure after the Essential deal. They're actually approaching the share price that was in that independent experts report that wasn't received favourably at the time. But, but mate, I reckon copper's got more chance of turning around quicker than lithium, the rate this is going. Mate, the tethered goat, TG6, they had the big run up to $1 down to 27 cents. Wouldn't want me shares to be in escrow on that one, I'll tell you something, boys. Win some. Raised at $1.22 last year.
Not winning some right now.
No, down to, what are they, 70 cents.
Yep.
You say you win some, you lose more. And the good old Wildcat, bloody did the $80 bulletproof raise at 76 cents last year, now down to 47.5 cents. So I guess hindsight is a great thing, as the great Xavier Prevost from JP Search says. It looks to have been
really bloody smart.
Really bloody smart.
Love your work there.
Oh, mate, just an update. Nothing to report, but lithium not in flavour today.
I got a theory if it maybe can partially explain some of that when we get to the Albemarle story.
So what's happened there, boys? What's going on?
Well, let's rip in. So we'd seen a couple of days ago now that Albemarle were looking to sell their $120 million stake, or 4% in the company of Liontown. So they've done that through JP Morgan. They've sold it. They bought that stake. It was confirmed at $1.90. So they've taken a bit of a haircut on the way out. They've sold at a price of $1.26 a share.
Nasty.
So is that the average price they bought at was $1.90?
Correct,
So they obviously bought a bit before they had the bid, and then it went up. Yeah.
Well, they would have bought well before, when, it only came out after, a few months and multiple bids had been made. So it would have been a long time ago now.
Yeah. And I think before we go further into Albemarle, because we've done some work there, but I think we should have a chat about what it means for Liontown, right? Because that's the more relevant thing to all of our a lot of our listeners. And I always thought that once SQM launched its bid at Azure using that clever dual transaction structure, that there it was, there's the playbook. You kind of force an outcome to, whoever's a troublemaker, Chris, Gina, both, whatever, they're sort of forced into a bit of an outcome there if they don't want to end up a minority shareholder in that process. So to me, I was wondering, will Albemarle watch this playbook at Azure and come back with a new structure, similarly structured, looking for an outcome there? And it turns out the answer to that is no. They've lost their appetite, even with the stock trading much lower than their bids were.
Yeah, and it doesn't look like it's not good an indication for other lithium hopefuls that might have been looking for Albemarle to buy into them or buy them out.
I think that's maybe part of the sell-off today is a lot of the juniors and et cetera, undeveloped lithium projects, they were still commanding a pretty healthy price because there was this M&A premium associated with them. There's corporate activity. Albemarle sort of withdrawing from Liontown at $1.20 odd, whatever. That's a pretty big, pretty big statement that maybe that M&A activity is cool.
Yeah. But Gina's still on there at what, 18.4, so what is it? Something like that, 19? Or she got to 19.9, didn't she?
Yeah.
Yeah, so I wonder if if there is ever what do they say, never catch a falling knife, but if the lithium rebound does happen, I wonder if it opens up the door for SQM to come in with Gina on that one too. Who knows?
Yeah, the contrarian, they're almost contrarians now, the people who are sort of long lying down, and they point to the fact that Gina was sort of forbidden from lobbing a bit lower than the highest price she paid until 4 months later. I think that 4 months hits
next month, eh?
I think it's less than that. I reckon it's less than a month away, yeah. But it is sometime in February, but it's less than a month away.
Yeah, I mean, the way to look at Albemarle is that they're having a good look internally, and they're in cost-cutting mode now, right? And you can see it in their announcement today. They want to cull $95 million US from sales, G&A costs. They're looking at lowering the headcount, lowering spending across contracted services.
Won't be 25 people going to conferences anymore.
No. So 30 was the number I'd heard.
30?
So,
bit of mayo.
Yeah, so looking at Kemerton, there'd been a lot of talk there that a huge cost to get trains 1 and 2 complete, about $1.5 billion US is what Ellison had said not too long ago. So they got them complete, but now they're focused on commissioning those ones. They're still going to construct Train 3, but Train 4 is on hold now. And as a quick reminder, those 4 trains combined were meant to be producing 100,000 tonnes per annum of lithium hydroxide. That feed of concentrate was coming from their stake in the Greenbushes mine. So they're also cutting their capex for the coming year from $2.1 billion to a midpoint of $1.7 billion. And they want to unlock US $750 million in cash flow over the near term. So they clearly, had a good look inside. They want to appease investors as well, I'm sure, and cut down on all this expenditure, as I'm sure the earnings of the company will come off substantially from the last couple of years.
You look at now with MinRes, and it's probably great that they got out of Kemerton when they did.
You're right. And MinRes is a bit more of a diversified miner. With iron ore at these prices, they'll be making a bit of money on that side of the business too. So they've got a few other things to point to. Just on Albemarle, I think it's good to sort of come to our thoughts and our conclusions. I mean, obviously we've just spoken about how quickly the winds come out of lithium. It sort of remained frothy despite the commodity price coming down for the majority of the second half of last year because of exactly what you said, Trav, the sort of feeling that you might catch a bid from Chris or Gina or SQM or Albemarle. That seems to have well and truly left the market. And I mean, another thought is that I reckon Albemarle are pretty thankful that they didn't end up being successful in buying Liontown. I'm not sure what you guys think of that.
Yeah.
Today's prices, they'd be pretty thankful.
Yeah, I mean, I'm sure they wish they didn't take a loss on the stock as well. But yeah, I'm no expert on Albemarle, given it's a chemicals business and it's not an ASX company. But I'm pretty sure one of the big motivations for them to buy Liontown, because you'd asked the question why Liontown, right? And one of the motivations was due to downstream facilities that Albemarle have in China, needing the feedstock. And it was explained to me that Albemarle would have to buy a project not in production yet because of the competition regulator in China. Someone smarter than me might end up correcting me on this one, but apparently Albemarle would have needed to get approvals from the Chinese competition regulator, and they apply basically a 12-month look back on production as part of their assessment, which would make receiving approval highly unlikely if they tried to acquire, say, Pilbara instead. And the thing we haven't talked about here with Albemarle, they were, once the bid was out at the final price there, they were under pressure from credit rating agencies. Albemarle, they'd have to tap debt markets to do the deal, and the agencies were flagging changing their credit rating. And when they pulled out of that deal, you saw Fitch, who do these, ratings, they put out some commentary that Albemarle were no longer under pressure for them to change their credit rating. I'm no genius, fellas, but gearing up in cyclical industries at cycle highs isn't a good idea. So, JD, I reckon you're probably right.
It showed how quick it can change.
I think you're bang on. And I think the last
couple of months.
The last thought is that what happens to the other sort of smaller stakes that Albemarle have around the world, really. The one that really comes to mind is PMET.
5% in that, isn't it?
Yeah.
And a 12 months was a standstill.
A standstill that, what was that done? Half a year or so ago. So yeah. I can't imagine they're going to be making a move on that anytime soon, but, time will tell.
Yeah, well, they've got 10 rigs going out there, so I think they'll be, I'll be just drilling and defining for a while at this market.
I'm sure someone else would say they're withdrawing from Liontown to have a more fulsome crack at big swing.
Oh, yeah, wait for that tweet to come out, definitely. Righto, rapid fire round, boys. What's going on?
Yeah, I wrote rapid fire round, but I think we've ended up just going very much in the weeds for, the next 5 stocks we're going to talk about.
So
we'll try and get into it.
Just real... what would you call?
Typical.
Just long fire. It's just an onslaught.
Okay, so MetalsTech, they're in suspension now. So MTC is the ticker for this one. They said on Monday they'd received a non-binding offer from a Canadian private equity group. So this group, the Transmetal Fund, put in a bid to acquire MTC's Sturec gold project in Slovakia. The proposed consideration came with US $36 million upfront on completion, and then another US $45 million on meeting other obligations. So that upfront cash component is equivalent to 28 cents per share. The stock fell on that news to 22 cents, and then the company comes out and claims that the deal is worth up to 64 cents per share in value. So the market is clearly not putting much weight at all in this deal being legitimate. So they're in suspension now. They've been told to give a bit more information to the market regarding this deal. So a couple more red flags on this one. I Googled Minmetals Securities, the group running the sales process. You don't get any hits. So that's a little red flag. Yep. And then secondly, you Google the buyer, Transmetal Fund. the same outcome. So
Whoa.
need to fill in the blanks there before, you're going to get excited and buy that stock.
You pique my interest when you uncover stuff like this, JD. I'm going to do some more research.
Uncover nothing.
Alrighty, Calidus.
Interesting one. They come out with some drilling results on their satellite deposit bulletin, which they're keen to build into the production schedule ASAP. I saw the announcement, and you'll see right there in their subheading of the announcement, it reads, Maiden Resource Imminent, which confused me because I recall the Maiden Resource coming out already on the 26th of October last year. And then again on the 27th of October last year via an amended announcement on the ASX after, they got some queries on that one. So I'm glad to know I wasn't going crazy because I think they actually meant reserve this time. Just a typo. But you'll see in the subheading there, it'll be part of a 2-year production guidance to be published next month. And you might be wondering why the mad rush to get, bulletin into the mine plan. It's all about the hedge book, guys. A week ago, Calidus, they lowered guidance for FY24 down to 58 to 65,000 ounces, and that was down from 65 to 75,000 ounces previously.
And what's the hedge book position there?
Outstanding hedge position at the end of December.
Are you saying it's a really good hedge position?
Outstanding. No. Remaining.
Yeah.
Exceptional.
Spectacular. The remaining hedge obligation is at the end of December was 83.25 thousand ounces at about a $2,367 per ounce, and that's $700 lower than spot price, which is a bit nasty, right? If you do the math on that's about 11, well, just south of 12,000 ounces per quarter need to be delivered all the way up until September 2025. And yeah, with Aussie gold at $3,080, it's a painful thing to have to do, right? But alongside the lowering of guidance, they disclosed that they shuffled $3,500 of the committed ounces from the March quarter, which is this quarter we're in, all the way to December 2025 at the back end of the schedule there. So okay, based on that reshuffling, you've only got 20,000 ounces to be delivered to the hedge book this half. So in this half, from January all the way through to June, only 20,000 ounces need to be delivered to the hedge book. If you take the midpoint of their guidance, that's 59% of their production they have to sell $700 lower than the spot price. Now, I've jumped on the tools.
Oh, mate, bloody that Microsoft 365 subscription's getting a workout this week, Ricard, didn't you?
Just for you, Matty, I've done a chart for you.
Love a good chart.
I think I've in this chart articulated what is probably very obvious to all of our listeners anyway. But I've charted up what Calidus's average selling price will be depending on their production output for this half year. You see the chart here, and I've shaded where their guidance range is, and it's a pretty straightforward chart to interpret, right? Obviously, the higher or more ounces they produce, the higher their average selling price because more can be sold at spot, raising the average. Simple. Right?
So that brings us exactly to the announcement you said at the beginning, right? This is why they are trying to get as many ounces out the ground as possible.
Totally. The point I'm keen to make, though, is look at the slope of the curve that I've charted up here for you. As you move from the right side of the page back to the left-hand side of the page, that curve steepens as you produce less ounces. So each marginal ounce less that Calidus produces has a larger impact on reducing the average selling price of gold. So it hurts them more at the margin incrementally for every ounce less they produce. Hence, they need to be doing everything they can to maximise the ounces they are delivering, even if those ounces have a higher cost base. And that's all because of the hedge book.
Alrighty, Mount Gibson, guys. Should we get into it?
Well, I'm curious, mate. Mount Gibson comes to mind because there's a lot of parallels between their share registry and also that of MetalsTech, which we talked about just 2 days ago.
That's exactly why I want to speak about it. That reason and the fact that iron ore is being, it's holding up phenomenally well, and I just wanted to see what a high-cost producer was, but it was in the back of my mind that this is a stock that would really tickle your fancy, Ricardinho. So they produce 1.2 million wet tonnes of iron ore at an average grade of 65.3% this quarter. So that's quarterly revenue of $228 million. Cash flow, $123 million. So they've now got cash and investment reserves of almost $360 million. Ooh. This company has a market cap of $625 million. And then, adding the net debt, that gives you an EV of $267 million. That's pretty bloody good for a company that has done $244 million in operating cash flow this financial year to date. So obviously that screen's cheap. You can run any sort of multiple you want on it. And let's get into why, because as usual, there's a catch. So if you were hypothetically to be thinking about investing that, you've got a bit of a margin of safety given the huge cash pile, the margin at which they're sort of operating, although, like I said, they are a high-cost producer. But then you get into the register, Trav, just for you. This one is another APAC-controlled stock. So they own 37% of the stock, not to mention the other interests that I'm sure they have on that register. So that would mean, realizing value as a shareholder and, not to mention as an activist would be particularly difficult. So iron ore prices also, they've been very strong. You don't have too much protection there. That would really hit you hard if iron ore prices do come off. And then you've also sort of got the elephant in the room that this is on Coolong Island. It's an island. There is quite limited mine life, so they're depleting that quite quickly. So I think there's, that said, easier way to get exposure to the iron ore price, but one if you were, interested, Trav, you could get active on as well, I thought.
Oh, no, it's too hard, that one.
So when you say realising the shareholder value is difficult, is that just because APAC's in it?
Look at how much they own. It was a
37%.
37. You can't beat that in a vote. Like, you just can't beat that in a vote. That's just, nah. Plus affiliated parties who'd vote with it,
Absolutely. And I'm sure there's quite a few affiliated parties on that board.
But if it's controlled that much by APAC and the share price stays low and they're keeping the cash in there, where's APAC get the benefit?
Oh, mate, I think you'd have to go to their website again where they draw the parallels that they've got a commodity trading business. They like to get the offtakes. So there's that element. There might be, a myriad.
So they get the benefit from control.
They have paid dividends as well in the past.
Yeah,
so
there could be some plans for change of control, which might, there's a plethora of ways that there might be some incentive to realise the latent value to some shareholders, but not all.
Roger that.
Exactly.
Now, boys, the Ora Banda quarterly, OBM.
Let's rip in.
It's one of those quarterlies that you're always looking forward to see what comes out. It's like, are they making money? Are they not?
And how'd it look, mate?
BHP quarterly comes up today, and Matty's like, "Nah, going into Ora Banda."
Mate, just leave the big ones to use. You look at the headline bits, but then you're like, right, let's get into the nitty gritty.
Did you read it back to front?
16,000. Well, as soon as I saw no lost time injuries at the first line, which is great because you don't want anyone getting injured, but you got to go to the bottom. 16,000 ounces. They said they've got their all-in sustaining cost down to 2,500 ounces. Remember, that was up 293. So there's obviously been some operational improvements there. Yep. But quarter completed with 19.2 million cash. So that's down from 22.7 million after getting 10 million bucks in the door from West Farmers. So it's like, right, still losing money. There's CapEx going out a bit for Riverina, but let's get right into it and figure out where they're sitting right now. First, probably take a look back at Ora Banda in 2023 because a lot happened with tenements and everything. So I thought I'll go through it for the money miners. So look, they raised $30 in April. So that was to fund Riverina. They then sold the Lady Ida tenements for $10. So then they also sold the Lady Ida exploration tenements for another $2.50 to Beacon Minerals. They also got paid 1.7 mil by Hawke's Point for the release of those Lady Ida sale tenements from the existing royalty. And look, that did have to. The royalty went from 0.9 up to 1% and removal of the 900,000 ounce cap. And then Hawke's Point also agreed, because Hawke's Point's a major shareholder, Hawke's Point agreed to extension of the existing 11 mil unsecured loan from Hawke's Point, and Hawke's Point extended that for the maturity date, which was when the payment had to happen.
And what's the rate on that one, mate?
They extended it it was supposed to get paid 31st of December last year, but it got extended to 30th September this year. It's 10% if they paid principal quarterly, or the interest rate is 14% if they paid just the interest. Gotcha. So it's on a 14% interest rate. Now, they also, bigger news at the end of last year. They also entered into a JV with West Farmers for the non-gold parts of the Davyhurst tenement package. So it was a $26 deal total. West Farmers have to spend $15 on exploration to gain 80% control. So it initially said they were getting $22 up front, but then it got amended and they only got paid $10 in December. So another $16 is coming in the door by the end of this April once the JV and royalty agreements are in place. So they amended the deal to bring a bit forward. So
they got more cash coming in the door from that.
And they also on-sold to West Farmers 1.5% of the 2% royalty for the non-gold rights with Hawke's Point for $4. So that'll either get taken off the debt with Hawke's Points or given to Ora Banda and the debt remains the same. So hopefully there's $20 coming in the door by the end of April. So look, adding it all up over last year, $30 in raised equity, the $11 million in debt, $44.2 million from the sale of all those tenements and royalties. So that's $85 total that they brought in the door last year, via financing and everything like that. So I guess if you add up the cash flow from operating activities for the last 4 quarters, because, the word is like, right, they're obviously losing money operationally. They're selling a lot of tenements and stuff to try and stay alive. They spent $41 million last year operationally. So by spent is lost. So that includes the development CapEx and exploration. So because, they're mining the pits there, but even with the mining, they still lost $41 million that's just in the operating activities. So I guess if you take out the exploration and the capital development, it comes out at $5 million. So you look at the first 2 quarters of last year were lost 2.75, lost 7.1. That's without CapEx or exploration, but it looks like they went into positive territory in the last 2. And I think that's attributed to a lot of reduced stripping ratios and things like that, and a higher gold price, obviously. Look, but that doesn't include $12.5 million of property, plant and equipment costs on top of that. So that's really just nutting down on the operation. But once you add it all together, pretty much if they didn't sell all those tenements and everything, they would have been in a lot of trouble. But they're still hanging on. So I guess they initially said this Riverina underground. So that's where the hope is for.
Well, they're more than hanging on. I just looked at their market cap. It's like a $388 million market cap company.
Yeah.
Hanging on for without having to raise more money.
Yeah, wow. I'm very surprised.
As long as Luke Cray's name's on the announcement, the thing's fine. So,
the magic man.
It seems to go up. It was flat today after the announcement. So, the Riverina underground, that's, I guess, what people are in it for, to see, like, right, is there going to be some higher grade ore come out of there that's going to, because obviously the pits they're not a mine maker at all. So they said they were $30 worth of capital had to go in to develop that. So looking at, I guess the quarterly's looking at the development capital that's been spent, that's totaled since May last year, totaled $25.5 million. So there's probably a bit more capital to come. Obviously the declines and stuff will be classed as development capital, and they'll be ongoing. But no mention in the announcement of when stoping is going to start. So that's what we're in it for, the stopes, boys, the underground stopes.
You're not excited until a jumbo rocks up.
Jumbos are good, but if you're a shareholder, you want the long holes to rock up to actually drill out the stopes, because jumbos cost you money. Long holes make you money. Look, they mentioned they did 224 metres of ore development in the quarter. So I think that they've reached their first ore drive of the main load. So looking at the plan below, the main load looks to be around 500 or 600 metres long of development up the top. Could be more, could be a bit less. Let's say they've started in there. Let's say there's 400 metres left. You see the drive goes up the guts. You got left and right, 200 metres each side. That's 50 4-metre jumbo cuts each side. Let's say they're going for a cut a day, which I assume they would. They might get less. They might get more if they really start turning it over. So 7 cuts a week each side. That's bit less than 2 months until that first ore drive is finished. Then the production drilling will have to start and the blasting. So rough guesstimate, I think it's about 2.5 months, give or take, before stope dirt's on the deck from that main load. So hence probably why there's no stoping guidance for this quarter. So
Yeah.
they're okay, and because they've also stopped mining in the Sand King open pit as of January, because they've got the Missouri pit and the Sand King pit.
Yep.
So that was a third of the ounces mined. That was 7,000 ounces were mined out of there because they're starting exploration there for a potential second underground mine. So I guess that's another 7,000 ounces that they won't get this quarter from that pit. They'll be getting some development ore from the jumbos, but it won't be as much. Like say they get 400 metres of development ore this month. There's a prediction at 3 grams a tonne. I think their grade was, 2.8 last round. That only gives about 2,000 ounces. So you don't get a shitload of ounces out of the ore development from the jumbo. So they've got 9.7 thousand ounces of gold in stockpiles, so they probably won't run out of stuff to crush. It's probably your low grade and all that. So I guess what's the takeaway? They really need that 20 million to come in the door from West Farmers by the end of April to avoid having to deplete the cash reserves.
16. Is that right? 16 more coming in the door by April?
Well, you got the 16 plus the 4 million
from the royalty.
from
Gotcha.
the royalty
Gotcha.
to Hawke's Point. If they either
Yeah.
take it, I'd assume Hawke's Point will probably give it to them and not take it off the debt. But yeah, because they won't have as much probably capital. It looks like a lot of the capital's been sunk for the fans, the pump stations and things like that. So there mightn't be as much capital going out the door this month. But as I said, Sand King's not mining, so you mightn't be getting ounces out of there. Look, as long as that West Farmer money comes in, I don't think they're going to have to raise money, and they might survive without having to do it. But they could potentially sell the other 20% to West Farmers in the later future, but not at these lithium prices probably. So they probably got that deal away at a good time. Then it comes down to, boys, execution on the stopes, because the reserve grade for Riverina, 4.3 grams per tonne, and they need to keep it at that grade. Look at this picture here. They haven't even got the jump operator or the geo's fucked up there because the ore's not in the middle of the drive. But that was the rest of them. The rest of them are in the middle.
There's a point here that this is quite a thin ore body.
Yeah,
relative to the width of the.
I guess it's narrow vein. It's called narrow vein mining, and here's the contrast of, say, the Northern Star way versus the Silver Lake way. So you can tell by this, a twin boom jumbo's has developed it. I assume it's about 4.5 metres wide. That's about the minimum width you can go with a twin boom jumbo that bores with a 4.9 metre steel. So everything either side of that pink paint on this picture is waste. Zilch. Nothing. You don't want to have to crush it. You want the gold. Doing it this way, it's a lot quicker to get the development in. You got 2 booms, you got longer steels, heaps quicker to develop your ore body, but harder to control the stope dilution because depending on the ground conditions, especially if it's poor ground conditions, the stope width can just increase as the lower drive width is a lot wider and it'll sort of start naturally blowing out to that point down the bottom and up the top. So
You take more waste.
yeah, so that's how it's quicker to get to the gold and get it out of the ground. That's like, that's what all Northern Star, I don't think they've ever used a bloody single boom jumbo.
Yep.
Silver Lake, on the other hand, at places like Daisy Milano and there are other mines with like your thin ore bodies, like they use the single boom jumbos. So you mine it to 3 metres wide instead of 4.5.
Yep.
So you've only got half the booms, and your boring steel's probably over 1 metre shorter. So development's a lot slower. You likely have to put in more development because you've got to space the levels closer because smaller long holes drills shorter holes, so you need to tighten it up a bit. But the stope dirt grade is usually a lot higher because you can control the dilution a lot better with those thinner drives. So question is, let's see if Ora Banda can deliver this reserve grade profitably.
That's a big question.
That is what we're waiting for.
All TBA. What are your thoughts, Matty? Are you sort of optimistic, or are you sort of just cautiously watching it?
Of course. Who knows? I'm not there. who knows?
Yeah.
But it sounds like the money coming in the door. They've got got a bit of balance sheet reprieve. It's just whether this will convert to the dollars, and finding another potential underground mine at that Sand King would be a big thing to get another part of the operation going, because they're targeting 100,000 ounces out of that Davyhurst mill. I think it's 1.2 million tonne per annum.
Yeah.
So an extra source of feed will be extremely handy. So at high, you want feed that is higher grade.
Yeah.
And that's what underground can deliver, but it costs a bit more sometimes. Right, boys, Ionic Rare Earths.
Mate, this is
What the hell's going on here?
quick one here. News out that the Ugandan government has issued Ionic with a large-scale mining license for their Mukutu heavy rare earth project. Some context just about the company.
Uganda, I've been there.
Have you?
No.
I'm going to sound so shocking, but every time I hear Uganda, I think of Coney 2012. Remember when that was like and it was an internet thing back in the day. Anyway, their project is an
JD was still in kindergarten, man.
you know it.
I actually remember that.
So their project is an ionic adsorption clay project. They claim to be the most advanced project in development today with a product not committed to China. So they're pitching themselves as a non-China producer. At the moment, Ionic has been running a demonstration plant at the site, which is due to produce first mixed rare earth carbonate this quarter. I remember this company being brought up when we spoke with Kingsley Jones at IMARC. He had some theory about a Linus connection and thought it could all be all looped back to the US Department of Defense and their heavy rare earth plans in some way, shape or form. But unfortunately, we never got to talk to him about that. He alluded to it, but then we wrapped up before we went there.
But we did speak about them about a month ago. They're another company looking to benefit from the EU's Critical Raw Materials Act. So they'll have their fingers crossed on that one.
Let's keep our eyes peeled, mate. Capped at $100 million, so not insignificant.
Yeah, absolutely. All right, last but not least.
The Crib Time Specialists,
That's
BHP.
BHP. So the reason I opened up this one was to see specifically what they'd said about nickel. So let's get straight into that. It's obviously a much smaller part of their business relative to the other units they've got. But here's their comments on Nickel West. The nickel industry is undergoing structural changes and is at a cyclical low in realised pricing. We are evaluating options to mitigate the impacts of the sharp fall in nickel prices, and a carrying value assessment is being done on the nickel assets that the group has. So we're expecting more details around the financials come Feb 20th when they release their financial results. So
to layman's terms, they might be shutting parts of the nickel down and they're going to write down the assets.
Yeah, I mean, the carrying value aspect is more of an accounting thought for the company, and evaluating options, read between the lines, strategic reviews, all those sorts of things don't often bode well. But let's see. I mean, the bigger question is what they decide to do with the potential investment coming down the track at Kalgoorlie, and I'd be very interested to see what they say about that in February. That's not all that far away now, Yeah,
and it's that the impact of what BHP do has a big impact on so many other companies that feed into that concentrator and smelter.
Absolutely. And like we touched on earlier in the week, it's much more than just a commercial decision for a company like BHP. So there are a couple other things I wanted to mention from the report whilst I flicked through it. The Jansen Stage 1, which had a US $5.7 billion CapEx, is 38% complete. So their first production is expected by the end of calendar year 26.
Oh, good work, BHP. See why?
Yep, just for you, mate.
Love your work.
And they've already pressed go on Stage 2, almost another $5 billion in CapEx. The unit cost guidance across the group were pretty much unchanged except for the BMA coal ops, which had an increase in CapEx. The period-on-period changes in realised prices saw some pretty massive swings, and I think this just really reinforces that we're, in the commodities market. So the realised price in iron ore was up over 20%, thermal coal down 65%, and then nickel was down 24%. So that's a commodities business for you, right?
God, imagine how much the money that because Rio and BHP, like their operations in iron ore are so bloody low cost, they'd be raking it in.
Yep.
So yeah, the nickel losses would be a piss in the ocean for them.
Yeah, absolutely. And last but not least, guys, they put 9 of the 23 pages here toward a project status update on the Olympic Dam deeps. So
Ooh.
one
Well,
for the
let me guess, it's all about uranium now. They never used to say they mined it till it bloody price went up.
It was actually pretty interesting. They reflected on drilling that they'd done in 2006 and 7, some holes that they'd done, very, very deep, well over a kilometre deep holes, and then they sort of expanded on that. So I'm no geo, they can go and read that. They sort of said that the mineralisation was showing signs that the system sort of didn't continue at along strike, but open at depth. So we'll see.
Isn't it funny looking at Oz Minerals now? Like the issue for Oz Minerals at Carrapateena and Prom Hill. One of them was there was the pocket areas where there was higher uranium content.
Yep.
So, and that was a problem for Oz Minerals, whereas BHP, it's like, well, we can blend it with ours. Perfect. In this climate, Oz Minerals would be like, right, let's go get all the high uranium bits. If they were still around.
They're not the only
times have
company
changed.
pivoting towards uranium.
Oh, there was a company today I saw it had ground next to Andover. They were thinking that, right, we're going to have lithium ground. Now they've got uranium ground.
Yeah, I think the company's names are better left unsaid.
Yeah.
Alrighty, guys.
Happens quick. Right, love your work. And you know who else I love? The bloody partners.
Oh, yeah.
Reel them off, mate.
InvestorHub. Give Rory Stein a call if you want to know more about the InvestorHub platform. You'd be mad not to. DSI Underground kept the mining industry alive over Christmas. Thank you very much. Terra Capital, McMahon Mining Title Services, Future Proof Consulting, anytime, anywhere, anything exploration services. It's just anytime exploration service. KCA Site Services, Brooks Airways, and K-Drill.
Hoodoo.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.